Let me hit you with a painful truth. If you are running a business on Schedule C and you don't understand this deduction, you might be handling that as a grand tip, like 5-figure tip. And if you are not even giving you a thank you card. The deduction that I'm talking about is the QBI deduction. It can cut up to 20% of your business profit right off your taxable income. That's money that stays in your pocket, not Uncle Sam's. And today, I will show you in plain English who qualifies, how the rules work, and the exact move you can make in 2025 and 2026 to keep more of your hard-earned money. Hi, I'm Mia. I'm a tax professional with more than 15 years of experience helping entrepreneurs build smarter systems for money, taxes, and operation. And here's the legal stuff that I have to say. So the video is for education only. It's not tax, legal, or financial advice. Your situation is unique just like yourself, so talk to a qualified professional before acting. Alright, now let's break it down in plain English. So QBI sounds fancy, but it's simple. It stands for Qualified Business Income. If you run a business as a sole proprietor, meaning you file a Schedule C, QBI let you take up to 25% of your profit as an extra deduction. For example, you make $100,000 in profit with QBI, you might get to write off $20,000 off it. That means you are only taxed on the $80,000. Important, this does not reduce your self-employment tax. It only lowers your income tax. And here's the updates. On July 4, 2025, the new tax law, the One Big Beautiful Tax Bill Act, make this deduction permanent. No more expiration date. It locked in for good. So who can use this? Freelancer, contractor, gig workers, or can use it. Local business owner like salon, landscaper, HVAC, dog groomers can use this. Online seller, coaches, agency can also use it. If you run your business on Schedule C, this is probably you. Now, there is one wrinkle. Certain service business like consultants, lawyers, health professionals have income limits. If you make too much, the deduction phase out. But don't stress. I will explain how to work around that. Let's put some number to it. Example 1, you are making $120,000 profit. With QBI, you could get $24,000 deduction. If you are in the 22% tax bracket, that saves you about $5,000 in taxes. Example 2, you are a consultant making $190,000. That close to the income limit. But if you put $22,500 in a solo 401k and $7,500 into an HSA, your taxable income drops and suddenly you qualify again. So that could save you thousands. Example 3, maybe you had a loss last year. QBI doesn't just vanish, that loss carry forward and reduce your deduction this year. So good to know so you're not shocked tax time. Here are the basics. QBI comes from profit, not from W-2 wages you pay yourself, not from stock gains, not from bank interest, just the profit on the business. Some service businesses like law or consulting get limited once income passes certain threshold. If you are not in one of those service businesses, but your income is high, the IRS wants to see either a payroll you pay to employees or a business assets you own, like equipment or buildings that call the wage or property tax. Starting in 2026, the rule actually get a little nicer. The income ranges where your deduction start phase out will be wider, giving you more wiggle room. And there's even a new minimum deduction of $400 if you got at least $1,000 of profit. That's automatic money back for a small hustle. So, what can you actually do to lock in this deduction? First, you want to time your income and expenses. If a big project is going to push you over the limit, maybe delay billing until January or buy the equipment before year's end. Second, use retirement account. So contribution to a solo 401k or SEP IRA lower your taxable income, and they can pull you back into QBI eligibility. You an HSA. If you qualify, max it out. That's another deduction that can keep you in the safe zone. Fourth, check your entity. Sometimes switching to an S Corp, changing the mix of salary versus profit, and make the QBI deduction more valuable. So don't wing it, get help on this one. Fifth, keep your book clean. The IRS looks at your net profit, so sloppy bookkeeping means sloppy deductions. The bottom line is good planning now means more deduction later. Let me bust some myths really quick. QBI is not a tax credit. It doesn't come up dollar for dollar. It reduces your taxable income. It does not cut your self-employment tax. Sorry, no free lunch there. You can count investment stuff like stock or bank interest. And yes, even small profit matters. If you make $20,000, a 20% deduction is still $4,000. That's real money. Want some extra juice? Here are a simple 5-move plan. If you make around $160,000 profit as a freelancer, first max out a solo 401k. Second, put money into an HSA. Third, pay some business expenses before year end. Fourth, spread big project across 2 tax years. 5, keep receipts for everything, home office, mileage, supply. That combo can save you $1,000 and lock in your QBI deduction. Let's look at 2 quick real-life stories. Case number 1, a consultant making $210,000. They stuffed $18,000 into a solo 401k, $7,500 into an HSA, and delayed to $7,000 invoices until January. Boom! They dropped under the limit and kept their QBI. Case number 2, an e-commerce seller making $400,000. They added 1 part-time employee and brought $100,000 equipment in December. That gave them enough payroll and access to pass the test and keep the deduction. If you want to make this super easy, I have built tools for you. So head to prodeduction.etsy.com for planners, calculators, and year-end checklists. And if you want deep dive trainings, check out accessyinstitute.com. That's where I go step by step into strategy like wage test, SSTB phase out, and entity planning. Now I want to hear from you. Are you under, near, or over the QBI phase out zone? Drop your answer in the comments along with your niches like under, designer, or over e-commerce. I will reply with 1 or 2 moves that tell to your situation. If you want more straight talk tax strategy for entrepreneur, hit the subscribe button and tap the bell so you don't miss the next video. So share this with your business owner friends. Don't let them tip the IRS either. And final reminder, this video is for educational only. It's not tax, legal, or financial advice. Your situation is unique, so talk to a qualified professional before acting. I'm Mia. Thanks for hanging out. Now more to save that money. Mahalo.